If you're trading based on ICT concepts, then this indicator will be the holy grail for you. This free indicator combines all of ICT's trading concepts into one powerful tool. In this video, we're going to walk you through just how this indicator works, and by the end, we're going to show you the best features and setups to profit in your trading. To find this, go to tradingview.com. and in the Indicators tab search for ICT concepts and make sure it's by LuxAlgo. This indicator covers a lot, but we're going to start with market structure. Market structure forms the basis for this indicator, making it easy to recognize shifts in trends and confirm existing trends within price action. It will automatically display BOS labels whenever the market breaks a swing point that aligns with the current trend. So if we have an uptrend, it will consistently be displaying BOS if it breaks past those swing highs. However, if it breaks past the swing lows, then we'll see a market structure shift label instead. This could be the first potential sign of a trend reversal. And whenever you see this, you should be cautious as the trend may be changing sides. This indicator will also show you displacement. Displacement is whenever the market makes an energetic move towards one side or the other, very often leaving behind a fair value gap. Now, the chart may sometimes look a little bit messy because of this. You're going to want to play around with the settings and see what works best for you. Next up, this indicator is going to show you volume imbalances. Volume imbalances are market imbalances characterized by two adjacent candles with non-overlapping candle bodies. However, their wicks do overlap. They can act as a magnet and can often provide support or resistance whenever price interacts with them. But that's not all. This indicator has so much. It even covers order blocks. On the chart, you'll see these displayed as blue when they're bullish and red when they're bearish. The indicator will mark out the candle close as an order block, but you can consider the candle open to be part of this area as well. Order blocks are an area where support or resistance is likely found. When price returns to these levels, there will often be a strong reaction. These areas will provide you with potential entries to make strong trades, typically looking for the next liquidity levels as your take profit targets. Speaking of liquidity, this is even included in this indicator. Turning this option on in the settings will show you areas of liquidity. Sell side will be shown as a blue box, while buy side will be shown as an orange box. These areas are where liquidity is likely resting, which means that there would be stop losses set just below or above them. And whenever you see them, you can expect the market to take them out before that potential reversal occurs. The next major part of this indicator is fair value gaps. These are the imbalances on the chart that are made up of three candlesticks. A bullish fair value gap, you can see here, is marked as a green box, and a bearish fair value gap is marked as a red box. Price typically tends to gravitate towards them, and they function in trading as successful support or resistance. But this indicator still got a few tricks up its sleeve. It also includes the option to enable NDOG and NWOG, better known as New Day Opening Gap and New Week Opening Gap. The day opening gap is the difference between the closing price of the previous day and the opening price of the current day. Similarly, the week opening gap is the difference between the closing price of the previous week on Friday and the opening price of the new week on Sunday. Like most of the concepts in this video, these can be used as levels of support or resistance. Last but not least, kill zones. Proper timing is essential in trading, and ICT kill zones highlight specific periods when high probability trades are more common, providing a significant edge to traders who utilize them effectively. So let's combine everything we just talked about, and I'm going to show you my favorite trading setup using this indicator. So here we have a market that has been ranging. It has no definitive direction. We're going to wait for one side of this ranging market to be swept. either breaking a swing high or breaking a swing low. And that's going to present us with our trade setup. So notice right here, these equal lows. This is an area of liquidity. It will be marked out by the indicator as a sell side liquidity. After some time passes, we can see that the market begins to trade through this level and take out liquidity. Then it proceeded to expand higher, making a market structure shift. This down close candle took out liquidity and broke market structure, so this becomes a valid order block. We can look to enter long at this area and target the opposite side of liquidity. Another way to look at this in a trending market, if we take a closer look here, we can see there are equal highs. We'll wait for price to take these highs out before we take action. So after it's done, by breaking the swing low and then creating a new bearish fair value gap, we can look to enter on the short right here and aim for a fixed risk to reward ratio like 1 to 2 or 1 to 3, whatever you prefer.